But for others, it's all about having that conversation and knowing about the family and how important these aspects of their finances are to maybe future generations, their short or their long-term goals. And I think you need to be able to understand that. So sometimes it's not all about the technical. It is about that fluffy feel.
At MBA Chartered Professional Accountants, we have 3 core beliefs. 1, we believe that business owners are the most important people on the planet. 2, we believe that the traditional accounting firm business model is flawed and fails to serve you. And 3, we believe the MBA way gives you what you truly want and deserve, resources and advice that helps you grow your business and your life. This is the MBA Way podcast. Hi, everyone. It's Eric Solbakken, and welcome back to the MBA Way podcast. Today, I have a special guest with me. His name is Scott McKee. He is an investment counselor at Cardinal, or senior investment counselor at Cardinal Capital Management. It's an advisory firm with over $4.3 billion in assets. Yes, I just said 4.3 billion. I love saying the number billion. It's one of my favorite words. It's a big number. He has both a CFP designation as well as a CIM designation. Actually, come to think of it, I always used to say this when I was going through and getting my CPA designation. I wanted to get the person who dies with the most letters behind their names wins. So Scott could be one of those people. In addition, Scott has some Scottish background. You're going to hear that when you hear his voice. We're probably going to get in a little conversation about some football and Glasgow. But without further ado, Scott, welcome to the podcast.
Thanks, Eric. Yeah, really great to be here today. I appreciate the opportunity.
Oh, this is going to be great. So, Scott, before we get started, so you and I kind of did a little banter back and forth. So originally, where from Scotland are you from?
Originally from a little town just south of Glasgow, so still part of Glasgow, called Barrhead.
Barrhead. I've been through there.
Yeah, really? Okay. Yes. There's a Barrhead in Alberta. No,
I know that. This is not the Alberta Barrhead.
No. And as a client in Toronto once reminded me, you mean Barrhead? So I was amping it up a little bit. But yeah, Barrhead is home. So.
Oh, lovely. Yeah. Okay. And then, of course, the ultimate question, what's your team?
Glasgow Rangers.
It's the Rangers. See, it's the Rangers. It's not the Celtic. See, my father-in-law, he's from White Craigs. And so
White Craigs isn't far away. Yeah. No.
Yeah, I know. So I told you I knew Barrhead.
Yeah.
So we were in White Craigs, and so he's been a Rangers fan. But the funny thing is that when we went to Scotland, oh gosh, it was a long time ago now. It was before my daughter was born, probably 18 years ago, 20 years ago now. We actually got to go see a game, but the only game he could get us was at Celtic. Oh. So we went to the Celtic match, watched Aberdeen play Celtic, and my father-in-law was petrified going into the bed. He goes, "Don't look at people. Don't wear the wrong colors. Don't wear blue. Don't look at it." I'm like, relax. I said, I'll just speak Canadian and they'll be friendly. And everything was fine. But my father-in-law was scared to death. It was the funniest thing ever.
Yeah, I know. I think Celtic, if he's a Rangers supporter, Celtic and Aberdeen might be the two biggest rivalries. Certainly Celtic, but Aberdeen is over the past few years has become another significant rivalry. But, at least you didn't go to see a Rangers game at Celtic Park. I've done that once. I'll never do that again in my life. Yeah, I feared for my life. I don't think any of us spoke to each other after that game for an hour until we were safely back in the pub with a beer in our hands. Is something else. When you're the minority and not the majority, it's quite a different experience.
Oh yeah, totally. I remember seeing, because it was the first professional match I'd ever seen, ever. And so I was so excited. We were up in the high nosebleeds and we're watching and we're singing and carrying on with the crowd, and the Aberdeen fans were off to the left, and then a tiny little group of them. And man, the supporters were spending more time heckling the fans from Aberdeen than they were watching the game. And I'm focused on the game. I'm excited. I played soccer as a kid, goaltender and center forward. Just loved the game. Loved it. And so I'm watching the game, but I'm starting to get in and I'm chanting and I'm saying all sorts of nasty things to these poor people. I found out what a sheep shagging bastard is. Like we were chanting till like it was too much.
Yeah, I wasn't sure if we were going there, but that is a common insult for Aberdeen fans.
Yes.
Pretty much anyone north of Glasgow might get that moniker, but certainly Aberdeen. Aberdeen was a team back in the 80s. You know, they had a great team and a lot of heritage, pedigree. But, you know, like everything over the last few years, the last 20, it's always Rangers, Celtic. But Aberdeen are probably the third or fourth team in Scotland. So they do have a bit of travelling support, but not anywhere near the Rangers. A few years ago, Rangers went through administration and got, as you might know, got demoted to the third, the lowest tier in Scottish football. And it was a bit of a boon for, you know, all these small towns, these outlier towns that have, you know, teams in the small leagues, maybe 200 or 300 fans, supporters, and then Rangers comes into town to play East Stirling and brings 10,000 fans plus another 30 in the pubs. So, you know, it must have been hilarious for these little towns. An economic boon for sure.
Exactly. Well, I call those the dark years for my father-in-law because he was kind of in mourning during that relegation period. So it wasn't a good thing. So anyways, I couldn't help myself. I knew we had to have a conversation about that. But let's go into this, Scott. I want to talk, like, what made you decide to get into financial advice? Like, what made you get into this?
Oh, to be honest, I think initially I went down the path of financial planning, mostly because I was actually looking at accounting. But to try to come up with sort of educational support from what I'd studied back in Glasgow to sort of to see what I had to do as part of the accounting course, it just became so problematic. And then I thought about the cost, and I thought, well, I could do my CFP designation pretty quickly, and the money's pretty good there. So that was kind of what led me down the financial planning route rather than the accounting route. And then the portfolio manager designations kind of came a little bit later as I branched off a little. But just given my age and when I entered the portfolio manager sphere, I'm more on the client-facing side, which is really good for us here in Cardinal because everything we do, research, the analysis is all in-house. So we've got all the CFAs on one side of the office. You know, we don't let them out too much. We don't put them in front of clients too often. And then that lets me get on the road or get out and about to prospect. And I've probably went off on a bit of a tangent there, Eric, but certainly I think going down the planning route was more a affordability issue to begin with. But it was a great choice. You know, I had 10, 12 years at one of the larger financial institutions here in Canada. Great education, training, and just experience. I think it's hard to come by for any folks entering this industry to sort of hone your skills, learn, and get in front of a client and be able to, you know, have those conversations. You just need volume and over time. And initially, I started off working in investments at the Royal Bank through their call centre. And it was a great learning experience. You know, you take 70 calls a day, all related to investments. And when I moved into the branch, all of a sudden you're taking 2 meetings a week related to investments. So, you know, that really pushed me forward in a shorter period of time, probably.
I can definitely attest to that going the accountant route, especially the chartered accountant route, which is what I did, and which is very expensive, very painful, very long, and yeah, I've got all the scars to prove it. So yeah, I think you made the right choice, my friend. Yeah. I think you made the right choice. But you know, with all that, I just want to highlight something for our listeners in case they got it, because here's the one thing. other than accountants love their acronyms. Like if anybody, business owners, you've been sitting down with an accountant, they love to talk about their UCC, the NBV, the ABCs, and the CDF. There's so many acronyms, right? I think the only other people that love their acronyms more than accountants are financial advisors. So you talked about a CFP, which is, well, that's a certified financial planning, right? Yeah. The CIM is Chartered Investment Manager. And that you called it CFA. You keep the CFA or CFAs away from the CFPs?
Yeah, all those acronyms I get.
So you get the CFA. So what the CFA is, a Certified Financial Analyst.
You got it. Yeah.
Okay. So if we were to compare that, let's say, like the actuary would be like the analyst. Like if you had an actuary, they'd be an analyst because they're doing all the numbers and crunches and you keep them in the back room. And then you have the kind of the advisors that are talking to the clients. So you keep the analysts away from the customers. You don't want them talking to the customers because they'll scare them away.
Yeah, I kind of like what's the movie, The Big Short, where you got your quant on one side of the room and you've got your salesperson who's actually got to deliver that message, I guess is where you're going there. I really look at, the CFA, the Chartered Financial Analyst designation is really one I think you need to get, like your accounting designation, straight out of university. When you don't have any kids, family, you're not trying to buy a house or go around the world. You're focused on what's the career path, because it's quite an undertaking. I would imagine similar to your accounting designation. Whereas the Chartered Investment Manager designation is, for your listeners, maybe I like to say it's the poor man's CFA. But it's actually a little more in line with what my role is at Cardinal. And that's sort of working through the sales process, the ethical process, getting to know the client, know what their goals, objectives are, go through their capacity to take risk, and work through some of those areas. So it's a bit of a blueprint for being more client-facing, I think. So here's your financial analyst is a far broader, you could come out of your CFA and you're going down the route of being an analyst. It's more about research, being research focused, whereas the CIM is more for client-facing advisors, client-facing portfolio managers.
So I got a question here, and I'm sure the listeners do as well, because I'm like, again, I jokingly used to say, the person who dies with the most letters behind their names wins. And financial advisors, I'm just grouping that under the umbrella of, like, say, accountants, because accountants used to have, we used to have chartered accountant, then we had certified managerial accountant, we had certified general accountant. Like, there was just all these acronyms. Now they're all called CPAs. But under accountant is the umbrella, and I call financial advisors kind of under another umbrella. When you see all these acronyms, how, as a consumer or looking for someone to help you advise you on the money, because you're making, most of our listeners here are business owners. They're making all this money, they're working in their business, and then they have this money, the wealth that they need to invest in. And at MBA, we talk about 4 planning pillars. There's 4 pillars in the business owner's life. 1 is the business plan, 2 is a wealth plan, 3 is retirement plan, 4 is estate plan. So you got your business, wealth, retirement, estate. So you're making your business, you're making all this extra money, and now you're looking to invest that money to grow your wealth, right? And so now they're coming in and they're looking at all these letters behind everybody's names. How do people, without, taking a doctorate on what all the different ones mean, and you have the curse of the expert, you understand the nuances of it, but how do we figure out which one means what and who can do how? Like, how do you do that? Ultimately, it was one of the questions I was going to have for you is, how do you pick the right advisor?
Yeah, great question. I think insurance advisors in the grand scheme of things have probably got us all beat with acronyms behind them. They seem to love acronyms. Maybe a dozen is par for the course. Looking for a C at the start is always a good, maybe a starting point. Does it have a C at the beginning? That might look good. The Globe and Mail a few years ago did a great article, and it was kind of looking at CFPs versus RFPs and CFAs versus CIMs. So the way they broke it down, I really liked, the CFP is really the sort of gold standard. You could be in a bank setting and you have a PFP, the personal financial planning, really related to what the bank does, selling mutual funds, making sure that you got enough insurance, whereas, to cover those estate liabilities, et cetera, et cetera. Whereas with the CFP, a lot more broader scope. So certainly take a little longer to complete than a PFP. And then you've got the RFP, the Registered Financial Planning Designation. Very limited amount of folks in Canada have that. It's kind of a peer group that sort of examines candidates and looks at the financial planning that's being produced and very limited number of those. They're maybe, I would say, at the very high end of, some of the best advisors in Canada.
Sorry, so that designation was what again?
Yeah, it's called the Registered Financial Planning Designation. I like to say it's the Willie Cardigan and Sandoz brigade. Been to a few of those conferences, and they're very focused. They're extremely focused and they're very good at what they do. But so the RFPs are, you won't see that often. That's the thing, is to be cognizant. It's the CFP is what you're looking for. Certified financial planner when you're out shopping for an advisor.
Okay.
When you're looking at those other designations, the CFA or the CIM, those are more what I would say behind the scene advisors. Typically, they're working in a investment firm like Cardinal, or maybe it's Investors Group or something like that. They're more a little behind the scenes. One thing that the article in the Globe and Mail touched on was if you're working with a CFA, they tend to be very analytical. And it's hard to sort of take that down a notch or two when you're trying to convey a message to clients. They tend to work with, very much larger dollars. They're not as focused on working with individuals. It's rather working maybe from a portfolio management perspective than working with individuals to ascertain their goals and objectives, et cetera, et cetera. So I think the first area if you're shopping is to chat with several advisors, make sure they've got those designations, the CFP. What's their experience? Where have they come from? Are they from one of the big banks, or have they branched out and worked with a broker? When clients get to a certain level of assets, I think more opportunities start to open up. And that's really where the boutique investment firms like Cardinal maybe come in. And usually, as a discretionary portfolio manager, we need to be licensed as portfolio managers. We're a fiduciary. We have no sales targets like maybe you find in the bank. And that, again, so everything we do is at the is with the client at the front, and making sure that any decisions are for the betterment of the client. You probably have a few years of experience elsewhere before you maybe come into a company like Cardinal or start to move up a little over time. So I think making sure you're looking at experience. Have you got a CFP? There's a lot of advisors out there that are holding themselves out as advisors with no qualifications, and it's a struggle for the regulators. I don't think that's as much of a struggle maybe on the accounting side. That's pretty black and white.
No, not even close. No. So what's happened in the accounting profession is that they've taken the three designations and they've merged them into one. So now everybody has a CPA designation. So everyone's a CPA. So sounds familiar? It's down in the States is CPA. So now the Canadians are now all CPAs. You think that maybe there's a merger coming in the future with Canadian and US? That's just my 2 bits on it. We call ourselves chartered professional accountants now, and they call themselves certified professional accountants. But we used to have 3 tiers. We had the chartered accountant, we had the certified general accountant, then we had a chartered management accountant. And it's very different. Like the CA with chartered accountant was the gold standard, that you had to have a university degree. You had a very high level. The final exam was 50% pass rate. But now you have someone who can have the lowest, like they could have a CMA designation, and now they're called a CPA. So everybody sounds the same.
Yeah,
and this is the thing that drives me crazy, right? Is that about the accounting profession is that most accountants certain accountants, I should say, are very frustrated because they're trying to be entrepreneurial in their thinking. And there's two models. There's an entrepreneurial model, and then there's a bureaucratic model. So there's an entrepreneurial organization, like our clients, our business clients, are trying to create value in the world. So entrepreneurs are trying to create value in the world. What do bureaucratic organizations do? They put controls in place. So the whole thing a bureaucratic organization does is put rules in place to control what you do. Kind of like, regulated, can't just jump on a podcast. You have to actually get authorization first. You know what I mean? So you've got this group of accountants trying to be entrepreneurs, but they're trained, monitored, and disciplined by a bureaucratic organization. That's where the structure, that's where the frustration's been. And that's for me working in this space. And I work with accounting firms. When I started with MBA, Peter was like, we're entrepreneurial. We want to think like our business owners. So let's break free from that bureaucratic thinking, which is making everybody the same. And I think that's the craziest part. And I'm sure you're frustrated with that as well, because everybody goes, oh, they're all just financial advisors. You're all the same. I'm like, oh, no, they're not. Yeah. And same with accountants. They're not the same. They're seriously not the same. And so that's one of the things I really wanted to dive in with you around what makes what is the difference with you and Cardinal. And I want to talk about, the difference about Cardinal and why you stand out in the crowd, right? Like what you should look for and what should people look for in a financial advisor? Because again, I agree with you. Most people are like, oh, accountants are all CPAs. They're all the same. Oh gosh, they are not even close. Not even close. And then the same thing goes for financial advisors.
Yeah. And I think, you're placing a lot of trust in an advisor in that capacity that you need to do your due diligence. I think you have a bit of a gut feeling about people pretty quickly, or we tend to hope that we've got a gut feeling about folks pretty quickly. So there's a trust element in that conversation. But I really think that, everyone's financial situation or plan for the future is a little different. I look back to my time at the bank, I very seldom came across, business owners, to be quite honest. And I move into Cardinal, and 40% of our clients are business owners with corporate accounts and personal accounts here at Cardinal. So again, over the years, although I'm not an accountant and a tax generalist, you tend to pick up quite a bit of knowledge and understanding of the corporate structure. So I think experience as much as, designations first and experience second, and obviously finding that trust.
I love that, because I've been writing my notes here as we're talking, and I'm going, okay, what do people need to look for in an advisor? So these three things: look for the CFP designation, right? Look for that CFP designation. Number 2, find out about their experience. Mm-hmm. And number 3, trust your intuition. Trust your gut and say, is this someone I know, like, and trust? Is this someone I know, like, and trust, right? And so people do business with people. They don't do business with corporations, right? They do business with people. And so that's the most important thing at the end, is actually trusting your instincts.
Yeah, I think people like working with good people. And I think, you can get a sense of that pretty quickly in a meeting. For some folks, that's just getting down to the nitty gritty, focusing on the task, not as much in the fluffy conversation. But for others, it's all about having that conversation and knowing about the family and how important these aspects of their finances are to maybe future generations, their short or their long-term goals. And I think you need to be able to understand that. So sometimes it's not all about the technical. It is about that fluffy feel. And the banks have been phenomenal at that. That's been their approach for a few years now, is going after the touchy feel. And that was a big difference, a big change coming into Cardinal, where we're all very technical and it's all research based, and you just come straight in with, this is how we manage assets and this is the only way to do it, as opposed to taking a beat or taking a step back and finding out what's truly important. We're not we're not the one style or the one shop for every client. And in many cases, by the time clients come to Cardinal or firms like us, they've probably been investing for 10 or 20 years. They've got some experience maybe working with some advisors along the way. They maybe had a few poor experiences, quite often related to the market. So sometimes then it comes back to just being a little bit more educational in the conversation. Just because we're a conservative, value-focused manager doesn't mean to say our portfolio is not going to drop 30% with the market. Hopefully not as much as the market, but certainly equities are equities. Good companies sell off with bad companies. So when we're sitting down with clients, or I'm sitting down with clients, there's certainly an educational piece in there. And I think if once you get into that dialogue, you start to get a good sense of experience, education, and just what that individual is going to bring to the table.
One of the things that I always talk to with a client, and what we are aspiring to do with MBA, and the reason why we changed our model, is that it's all about people's bigger, brighter futures. That's really only thing that any of us are doing, is helping remove obstacles for other people so that they can get the life that they want for themselves. Like that's ultimately what we're after. I mean, that's ultimately what people want, is they want a bigger, brighter future. And so to know exactly what they want is number one. Then you can take all the technical and apply it to get them what they want. But until you know what they want, you just can't do one size fits all for these people. Like, so they have to be the fit. So my question to you is, like, when do people know that they're the right fit for Cardinal? When would they be the right fit for Scott? When would they come in and talk to you? When would it be, who's your ideal client?
I think when we look at the philosophy, Eric, I think we always come back to style and understanding why you're invested the way you are, why we own these companies. So transparency, communication is key. With a lot of investors that come into Cardinal, they may have had exposure to our style in the past through mutual funds. And I actually quite like that. That way we're not a departure from what you're doing today. I'm not saying, look, that was yesterday and this is the way forward today. We've been investing for clients the same way for over 30 years. If we all of a sudden started to change our philosophy or structure style, clients who have become accustomed to this approach might start to think, I might start looking elsewhere. So consistencies, I guess, is key when we're sitting down with a client and just running through the fundamentals. What is it that we do at Cardinal? How do we invest client assets? And what can you hold us accountable to? There's so many times that we've looked, or I've looked at client statements. Clients might have 2 or 3 advisors, and one advisor selling something while the other's buying it, and vice versa. Before we know, there's transaction costs in there, and the client doesn't really understand why they own those, why one was selling and the other was buying. We like to keep our clients informed. I think transparency is key there. It was certainly through the COVID period, but we've always had a monthly, quarterly newsletter that clients love. Simplicity on the statement, so really easy to read. And just enough in there where we're not losing people. I hate the word dumbing things down, but just trying to take the conversation to a level where I feel comfortable. If a client says to me at the end, I understood that. That to me is my pat on the back. Too many times, I think clients go into these meetings and they come out exhausted, not understanding a couple of 5% of what they discussed. If we take it down and bring it just to broad strokes, at Cardinal, the one thing you can hold us accustomed to is we're going to grow the income in your portfolio. What does that mean? Let's look at a couple of examples over the history of our tenure as a firm. with this strategy. And I think that really resonates with clients, prospect clients. Sometimes a graph or an image tells 1,000 words, or tells the story itself. I've spent quite a bit of time sort of, I think working in the bank was great for me because I sort of honed those skills of just taking everything down to the lowest denominator and then building from there. And I really think when if a client says, look, I understood that today, no one's explained that to me before the same way, that gives me a lot of satisfaction.
Cool. So tell me, I understand that Cardinal's coming to town. What's going on there?
Yeah, super exciting time. We've actually opened the office. So we opened just in July there. It's on 550.
In Kelowna.
You got it, in Kelowna. 550 West Avenue, fairly new building, certainly a nice building, great spot, and we couldn't be happier. It's been a bit of a shift in strategy for Cardinal, certainly over the last 5 years. We built our business predominantly working with independent advisors, and in Kelowna, we work with 6 independent advisors. In total, we work with over 100. Myself, my team, and our executive vice president's team probably look after about 50 advisors each. What we've sort of been moving towards is trying to attract those advisors to come in-house, bring their clients in directly, and it allows them to be a little bit more involved in what's happening at Cardinal. They're not just simply selling a product anymore. They've got a little bit more engagement, and if they start working towards their designations before they know they're self-sufficient. So they might have that planning background. They've relied on Cardinal to be the portfolio manager and the voice on the asset management side, but maybe now they're getting to a stage where they want to come in-house as an employee. And that was the case in Kelowna for one of our advisors that we work with out there. They thought they were 100% Cardinal by this point and opted to come in direct and be a part of the firm as opposed to being independent. So that was one of the shifts that we've done over the last few years, and this was us just now looking for that opportunity in Kelowna, working with a great team out there.
So here's the question: are you in Kelowna?
No, we're actually based in Manitoba. So I've been in Manitoba and Winnipeg now for 24 years, but having been out to Kelowna now for probably the past 10 years with Cardinal, that is ultimately the plan. So maybe putting the horse before the cart a little and getting the office open, but it is the plan that I would be slowly transitioning and moving out to Kelowna, probably within the next 2 to 3 years. So it's been a bit of a process.
Well, that sounds good. So then when you get to Kelowna, you let me know. We'll go for lunch and we'll talk Rangers football. We'll go talk Rangers football. Maybe go, yeah, that would be great. Scott, I really appreciate you being on the podcast, and I'm looking forward to seeing you in Kelowna very soon.
Yeah, it's been great. I appreciate the opportunity. I will be in Kelowna quite a bit more than usual, certainly over the next couple of years. So hopefully we can get that lunch date going sooner rather than later.
Awesome. Thanks again.
Thanks, Eric. Appreciate it. Thank you.
Bye. If you're a business owner or CPA who believes the accounting profession has let you down, then please reach out to us at www.mbacpa.ca so we can have a chat to see if we're a fit to work together. We're always looking forward to talking to you. See you next time.